Ever wonder how wealthy people pay zero to little taxes? And you're like, how can I do that? Well, in this video, I'm going to walk you through the top 3 things that wealthy people are doing to pay minimum taxes, and you can actually do them as well. My name is Anna. I am the owner of The Tax Boss, and we are a virtual CPA firm where we help clients all over the country play the IRS game just like wealthy people do. So let's get right into it. Number 1, very basic. These rich people do not have W-2s. They are not employed by other people. They are employed by their business, but they are not employed by other people. So the first thing you need to realize that if you're a W-2 earner working for a company, the amount of things that you can write off are very, very, very small. So if you're tired of the rat race and you're like, how do these rich people do it? Is they got out of the rat race, they either bought a business, started their own business, and now they're able to take all of these write-offs against their income that they have. But as a W-2 earner, you have very little losses. So with that being said, what you need to do and what wealthy people do is, here's what they do. They buy businesses or they start their own business. And the reason for it being, you're able to take a lot more write-offs pretty much your entire life. Okay, well, not your entire life, but 90% of it against your active income. So let's say, for example, you decide that you want to quit your job and you start a roofing business or you buy a roofing company. Everything that is related to the business is now a write-off, including these trips that you go to learn about businesses and masterminds. Like, why do you think Tony Robbins has these masterminds in like these luxurious places? Obviously, they're pretty, but it's also a write-off. And you're able to put some personal time in there as long as you do it correctly. And you're able to take those first-class tickets at the St. Regis all against the income from your business. You can start hiring your spouse. You can put them on the board of directors. If you do have an S-Corp and don't even know what a board of directors is, I'm leaving this video right here so you can go ahead and watch it. But what I'm telling you is you need to have a business or buy a business. That's number 2. Number 3 is they buy real estate. Now, here's a hot take. Real estate is not going to make you rich right away. Real estate is for the long game. Real estate gives you tax advantages, which is what rich people do. So what they do is they go buy big real estate because that allows you to take huge losses from depreciation against income. This is why you hear people talking about bonus depreciation and being 100% over and over and why we want it back. Let me give you a really quick example. A while ago, you would see it on social media all the time of these gurus who were buying, G-Wagons at like, let's say $250,000, and they were able to take a full $250,000 deduction against their income. That's the same, but for real estate. So imagine if you have $1 million commercial building, you're able to take huge losses against the business that you already have and pay little to no taxes. So let me just give you another example because I'm a person that learns by examples. Let's say you have this roofing company that we talked previously in this video and you're printing money. You just are making money. Eventually, there's not a lot more expenses that you can take, right? You already bought new equipment. You already took that first class trip. You already added your wife to your board of directors. I mean, everything is low-hanging fruit. What happens is you have such high net income in the roofing company that the only thing that you can do and what wealthy people do is they buy real estate. Because when you buy real estate, you're able to take huge depreciation losses. And guess what? Boom. Take it against the active income of your roofing company. So you need both of those, and that's what wealthy people do in order to minimize their tax liability as much as possible. And the freebie, which is number 4, is they self-direct their IRA. This is how wealth is built. If you have no idea what this is because they don't teach us in school, this is how this guy right here turned his $2,000 IRA to $5 billion, and he will pay no taxes on it. His name is Peter Thiel. I'm going to leave the video here for you to watch it. But what does self-directing your IRA mean? In short, because this video really goes into that, essentially is when you're actually able to invest into whatever you want in your IRA. So let me give you the example of a girl who was 26 years old that I met 3 years ago at a conference. She quit her W-2 job. Number 1, she knew what to do, and she started her own business. But she took that money that she had in her 401k from her W-2 job and did a backdoor Roth conversion. Okay, she put all that money into a Roth IRA. She started being partner in flips. So people will come to her and they would say, I don't remember her name. Let's say it was Marie. Marie, I need money. She's like, oh, I got money. My IRA has money. So she turned her $200,000 401k into $4 million after 3 years. Okay. She was able to continue to reinvest that money into flips. She became the partner of the flip. She became the partner of the flip. And all of that income that she made from the flips went into her Roth IRA. And the best part is that she's never going to have to pay any taxes on a Roth IRA income. This is why it's so important when you hear when new laws are being passed in Congress, what self-directing your IRA is, what the limits are, because they want to limit that because this is how crazy wealth is built and they get no taxes from it. I really encourage you to go watch this video because I go into detail of how to set up a Roth IRA, what you can do, but it's very crucial. I hope you enjoyed this video, and if you liked it, please feel free to subscribe, like, or share with others that you feel would really benefit from teaching them how to play the IRS game just like wealthy people do.